In the blink of an eye, a stock market crash in Asia can send shockwaves through Europe, while a policy change in Washington can ripple across Africa. These are not random events, but pieces of a larger, intricate puzzle. What drives these seemingly distant but interconnected economic tremors? Let's talk about the global economy, where every decision, every transaction, and every policy has far-reaching consequences. Defining the global economy. When you buy a smartphone, parts of it might come from China and be assembled in South Korea and designed in California. This device is part of a vast network known as the global economy. But what exactly does this mean? At its core, the global economy is a system where goods, services, capital, and labor move across borders, linking countries in ways that were unimaginable a century ago. Driven by international trade, countries exchange products like oil and cars. Finance fuels this system, with investments flowing rapidly between markets. A global workforce supports it, outsourcing jobs and production to where it is most efficient. This interconnected system started to take shape after World War II as countries sought stability through cooperation. Institutions like the International Monetary Fund and the World Bank were established to manage this new economic order. The fall of the Berlin Wall in 1989 further accelerated globalization, opening new markets. Today, our world is more interconnected than ever, making it vulnerable to financial crises that can quickly spread and impact millions of lives. Key components of the global economy. The global economy is shaped by several key components, each influencing our daily lives in profound ways. Trade is one of the most crucial elements. It involves the exchange of goods and services across borders, such as coffee beans from Brazil being roasted in Europe. Trade enables countries to focus on their strengths and import what they lack. It is facilitated by trade agreements like the North American Free Trade Agreement and the European Union, which help streamline the flow of products and foster international cooperation. Capital flows are another essential component. This term refers to the movement of money for investment and business activities. Foreign direct investment occurs when investors from one country put money into assets or businesses in another country, while portfolio investments involve buying financial assets like stocks and bonds across borders. These investments are vital for economic growth, helping to fund infrastructure projects, create jobs, and drive innovation. Labor markets are also a critical part of the global economy. Companies often outsource jobs to countries with lower labor costs to remain competitive. This global labor mobility can lead to job losses in one country, but create new opportunities in another. Technology has a transformative impact on the global economy. Advances such as the internet, artificial intelligence, and automation have revolutionized business operations, making it easier to communicate and trade across the globe. While these technologies have opened up new industries and job opportunities, they have also rendered some traditional roles obsolete. Understanding these components, trade, capital flows, labor markets, and technology, is essential for grasping the complexities of today's interconnected world. Challenges facing the global economy. Not all growth is equal. As the global economy expands, one of the most pressing challenges we face is economic inequality. This issue is not just about the gap between wealthy and poor nations. It is also about the widening income disparity within countries themselves. In many parts of the world, the rich are getting richer, while the middle class shrinks and the poor struggle even more. This growing divide is driven by factors like unequal access to education, technology, and opportunities. It can lead to social unrest, political instability, and a weakening of economic growth as more people are left behind. But economic inequality is not the only challenge. Trade wars and protectionism are increasingly shaping the global landscape. Take the recent trade disputes between the United States and China, for instance. What began as a series of tariffs and counter-tariffs quickly escalated into a conflict that affected businesses, consumers, and economies around the world. These disputes often stem from efforts to protect domestic industries, but they can lead to higher prices, disrupted supply chains, and strained international relations. In an interconnected world, the ripple effects of such conflicts are felt far beyond the countries directly involved. And then there are financial crises, which can erupt suddenly and spread rapidly across borders. The 2008 global financial crisis is a stark reminder of how vulnerable the global economy can be. What started as a housing bubble in the United States quickly spiraled into a worldwide economic meltdown. Banks failed, unemployment soared, and millions of people lost their homes and savings. While some safeguards have been put in place since then, the global financial system remains susceptible to shocks, whether from risky investments, debt bubbles, or other vulnerabilities. As the world pursues economic growth, another challenge looms large: environmental sustainability. The relentless push for industrial expansion, resource extraction, and consumption has taken a severe toll on our planet. Climate change, deforestation, and pollution are just a few of the consequences of this unchecked growth. The challenge now is to find a balance between economic development and the preservation of our environment. This is not just a moral issue. it is an economic one. As resources become scarcer and the effects of climate change intensify, the cost of inaction will only grow. Lastly, geopolitical risks are ever present in the global economy. Conflicts, sanctions, and political instability can disrupt trade, investment, and economic growth. For example, ongoing tensions between Russia and the West have led to sanctions that have hurt economies on both sides. Similarly, conflicts in the Middle East have led to oil price fluctuations, impacting global markets. These risks are difficult to predict and manage, but their effects can be profound, shaping the future of global economic stability. These challenges, economic inequality, trade wars, financial crises, environmental sustainability, and geopolitical risks, are complex and interwoven. Addressing them requires cooperation, innovation, and a deep understanding of the global forces at play. The future of the global economy depends on how we confront these issues and whether we can find solutions that promote stability, fairness, and sustainability for all. The role of international institutions. In moments of economic turmoil, international institutions often step in to restore stability and offer support. The International Monetary Fund and the World Bank are key players in this role. The International Monetary Fund provides financial assistance and policy advice to countries facing crises, such as debt problems or currency instability. Meanwhile, the World Bank focuses on long-term development by funding projects in infrastructure, education, and healthcare to reduce poverty and stimulate growth in developing countries. The World Trade Organization plays a crucial role in promoting free trade and resolving disputes between nations. By enforcing trade rules and reducing barriers, the World Trade Organization helps maintain smooth and predictable international trade, preventing conflicts that could escalate into trade wars. The United Nations, known for its peacekeeping efforts, also tackles global economic and social challenges through its agencies, addressing issues like poverty and sustainable development. Additionally, forums such as the G20 and regional bodies bring together major economies to coordinate responses to global challenges like financial crisis and climate change. These institutions provide essential support and cooperation to address the complexities of the global economy. Emerging trends and the future of the global economy. In a world where change is constant, the future of the global economy is shaped by emerging trends that promise to transform the way we live and work. One of the most striking developments is the rise of digitalization. As technology advances, digital currencies like Bitcoin are gaining traction, challenging traditional banking systems and altering how transactions are conducted. The digital economy is expanding rapidly, bringing both opportunities and uncertainties as it reshapes financial systems and market structures. Equally significant is the global shift towards renewable energy. As concerns about climate change intensify, countries are investing heavily in green technologies such as solar and wind power. This transition not only aims to reduce carbon emissions, but also to create new industries and jobs. The move towards renewable energy is reshaping economies, with a growing focus on sustainability becoming a central driver of economic policy and business strategy. The influence of emerging markets is also on the rise. Countries like China, India, and Brazil are becoming key players in the global economy, driving growth and innovation. Their expanding economies are changing global trade patterns and shifting economic power dynamics. Looking ahead, the global economy faces several future challenges. Predicting economic crises, navigating technological disruptions, and addressing environmental issues will require adaptability and foresight. As these trends continue to evolve, it will undoubtedly shape the future of the global economy in profound ways. As we've seen, the global economy is like a living organism, constantly evolving, adapting, and sometimes failing. So what happens when the next disruption hits? Will we be ready, or are we heading toward another crisis? Leave your predictions in the comments, hit that like button if you enjoyed this breakdown, and be sure to subscribe for more insights into the forces shaping our world.